For more on the latest market moves, we want to welcome in Skylar Winan, Regan Capital Chief Investment Officer. Skylar, it is good to see you. So, just talking to Julie there, different cross currents today, Skylar. Consumer confidence disappoints. Of course, the news out of China. I think got to mention geopolitics as well. U.S. sending more troops to the Middle East. Skylar, but tell us what's front and center for you.
Well, the bazooka, obviously, from Fed lowering interest rate 50 bips, but also Waller, Bostic, some of the big Fed governors coming out and saying there's a lot more to go in terms of interest rate drops. And you just talked a little bit about the financials performing the worst today. It's kind of counterintuitive, but these big Fed drops actually hurt these banks in the short term. Okay, they were investing at 5.25 a week ago. Now they have to put their new cash or that fresh cash to work at 4.5, 4.75, if not lower, which is where front end bills are. So in the short term, financials get hurt because they're not earning as much on their cash and they're not able to lower their deposits that quickly. Yet they still have these loans and investments out there that are still only earning 2 to 4%.
When does that start to turn, Skylar?
People have been talking about the curve de-inverting. Well, that's only 2-year to 10-year, okay? Whereas the front end of the curve, 1 month, 3-month bills, where deposits go, CD, overnight repo, that needs to come down a lot more, a couple hundred basis points to like 3%. Which is where they're scheduled to go in a year from now. Whereas a lot of these banks are still lending in 30-year mortgages or in 5-year balloon loans to multifamily real estate and commercial at like 4 to 4.5%. So that front end needs to get below 4 real quick before these banks are in the black in terms of where they've already lent money versus where they're borrowing money.
What about, Skylar's other big news today? China's central bank taking action here, these measures to try to support that economy. I just get your analysis of that, Skylar. Does that get you excited about owning Chinese equities?
Stimulus is great. Stimulus is great for the market, no matter whether it's coming from China or the U.S., whether it's coming from lower interest rates or stimulus. Whether Kamala or Trump get elected, we're going to see further stimulus vis-a-vis deficits in the next few years. All that adds up into the market continuing to roll along, okay? And that's broadly speaking worldwide. And I think the end goal here on the China front is to keep the economy humming and keep the populace not protesting, not coming into the streets, not worried about losing their job, not worrying about the unemployment situation. And the Fed's in a very similar boat, okay? They need to keep unemployment at 3.5 to 4% here, not let it get above 5. Otherwise, people are going to start to, get mad and start protesting. And so that's what the Fed's worried about. That's what China's worried about. In this stimulus, whether it's coming from lower interest rates or pumping the economy with money, are going to keep the market rolling.
And Skylar, as our Josh Schaefer wrote about in this morning's Morning Brief newsletter, we're seeing some more 6 handles for the S&P 500 in terms of year-end targets, which sort of makes sense given the pace that we have seen thus far. Are we back to not fighting the Fed? Is it time to trot that out again?
I think that's true on the equity side. When you're talking about what's actually going to really be helped from, call it 3% interest rates, we're already at 3.5% across the board. You can still get about 4.75 on the front end, but 2s out to 30s are 3 handle. 2s to 10s are, call it 3.5 to 3.75 right now. So you're not getting compensated really for generic fixed income. That's boosting stock market values. To say we're going to go up another 5 to 10% between now and the end of the year is hard. Maybe over the next 12 to 15 months, sure.
Scott, I was going to ask you about the election, but and granted, we're only weeks away here from the big day, but do you believe, is the market even focused on that right now, Skylar?
No. I think the market sees them in one and the same. If Harris gets elected, maybe that affects taxes. If Trump gets elected, maybe that affects the currency situation between us and Europe or us and China, whether or when or where tariffs get put down. But the market really looks at them as one and the same. They're both going to be stimulative. They're both going to run deficits. And, so we're going to have to wait and see. I think what is going to turn the tables one way or the other is if there's a sweep. So if you have a Democratic president and both houses of Congress or vice versa, then we're going to have some microscopes on how is this really going to affect the market. But the jury's out on that sweep happening. We'll see.
We will. We got to wait. Skylar, thank you so much. Appreciate it.